a big red flag for me is not being fully honest. It's like a big no-no. I'm not saying people are lying, but I think I know the game. I know that you have to, sell the vision and all that, but also be realistic with it. And for me, I like to dive in deeper. I like to ask a lot of detailed questions. I've been told, I do the most diligence, at the stage that I do. And I'm not, I'm proud of that because for me, it's like I really want to understand everything that you say you're going to do, and knowing that your business is going to change, you know, 5 times before the next raise, but really understanding how you're thinking about the business, what your go to market strategy is, how you're going to make money, just really understanding all the pieces of it. And if people, things aren't adding up constantly, and if you're not following up and you're rushing to make an investment, I'm like, why all the things like, I've been doing this for 8 years now, and I've seen a lot of mistakes that I've made, and usually a lot of that involves not doing enough diligence, not really, rushing because of FOMO, not getting to know the founder as well. They need to get to know you, and you need to get to know them. It's a two-sided thing because it's a long partnership.
Hey everyone, this is Prashant and I'll be your host for the VC10X podcast. And today we have Samara Hernandez with us. Samara is the founding partner at Chingona Ventures. Chingona literally means badass woman. The investment thesis is to invest in badass founders from all walks of life. In this episode, we talk about Samara's story and how she started investing, what's the investment thesis, who is a badass founder, some exciting portfolio companies, and a lot more. So without wasting any time, let's dive straight in. Hey Samara, so good to have you on the VC10X podcast. How are you doing?
I'm doing great. How are you?
I'm doing good too. So to start things off, can we have your story and how you started in investing?
Yeah, my story is my background. I'm an immigrant to this country, was born in Mexico, moved to the US at a young age, picked up math quicker than I picked up English. So I studied engineering at the University of Michigan. But I grew up in a dual language, multicultural, low income household. So that's a lens I've always brought to my investing style. After Michigan, I joined Goldman Sachs during the beginning of the last financial crisis, and I was in sales. So I sold our financial products in one of the worst markets when the markets weren't performing, no one's products were performing, and we were in the news every single day. So I learned a lot about selling, about authentically selling to customers. And then I was there for the early part of my career, and then I went to Northwestern for my MBA, and that's where I took a class called VC Lab that exposed me to venture capital. And from there, I joined a local firm here in Chicago that had just started. So it was literally building from the ground up. And it was great because I got to learn everything that you need to learn to build a firm, all the fun stuff, all the not so fun stuff. And I was there through Fund One and Fund Two, across probably about 5 years. And then I saw an opportunity in the market. So I saw an opportunity to one, go in earlier, especially in ecosystems that didn't have mature angel networks. So Chicago is one of them, but many outside of the valley. Two, go in industries where consumer demographics were changing, but VC was slow to fund. And three, go with invest in entrepreneurs that didn't fit your traditional mold. So not all go to Ivy League schools and have a great network. So I launched Chingona Ventures in April of 2019. The first fund, we invested in 27 companies, pre-seed and seed. And Fund Two, we just closed in May of this year. It's a $52.9 million fund. We aim to be the first and largest institutional check into a company. We do pre-seed mainly in some small seeds. And so far, we've invested in 9 companies in that fund.
Right, that sounds incredible. And while I was going through the website of Chingona Ventures, I found that you mentioned very clearly that we are investing in badass founders, right? So who is a badass founder in your opinion, and how do you spot one?
Yeah. And that came from the firm name. So Chingona means badass woman in Mexican Spanish. And the way I think about it and the way we assess a Chingona factor, which we literally put in our investment memo, is we look for founders that come from all walks of life. So distance traveled is really important to us. Where you came from, what you learned, the grit, the hustle associated to um, coming from where you are and understanding your unique customer base and how that led to starting the company. So founder market fit is what a lot of people might reference, but this could be anything from teaching yourself to code to using guerrilla marketing tactics to sign up your first few customers. And many times a lot of that happens in certain communities regardless because they don't have access to capital. And so for me, it helps me understand you as a founder, what you've done to get early validation in really a pre-seed where there's not much validation. And it helps me understand if the problem you're solving is truly a problem that people are really willing to pay for. And so we look for that Chingona factor. I mean, it's kind of, it's also funny, right? When people address that, you don't necessarily see badass founder in many VC websites, but it's a nod to the name. It's a founder market fit essentially, and it's all the grit and hustle that many of the founders have, and making sure that we incorporate that in our assessment.
Yeah. Yeah, that sounds very interesting. So is that the entire investing thesis at Chingona, that they have to be badass in some respect, street smarts, in other words, having done things on their own, hacking things here and there, or is there more to it?
Oh, there's definitely no. That's one piece of it, and that's a very important piece, right? Because the founders we look at many times, it's just the founder and the idea. It's and very little in some sort of traction. But we look at the 5 Ps: people, product, profit, potential, and portfolio. People is the founder. Profit, or product, we look for problems that are solving things, the real problems. There's many nice to haves. We like needs to have, uniquely solving it for a customer. Profit, I know it's become a lot more, interesting to talk about good unit economics and a path to revenue and profitability, but we've always looked at that. Maybe it's me being in the Midwest, but having that from early on, and we know it's going to change, but having a path to revenue. Potential, so what are other players in this space, who's funding, what's the competitive landscape, what are exits in this space. So it could be a nice product, but there's not many exits, or you have to raise a ton with very little exit potential. It's less interesting. And then portfolio, how it fits in with the overall portfolio. So we focus on fintech, future of work, femtech, food, health and wellness, and tech. We sprinkle on kind of other areas, but that's our core focus. So we look to see, can we get very involved? So oftentimes we lead, we join the board, we get very involved with the company. And if we can't, are there investors that are doing that, and your lead and be involved? We like to be very involved. And so if there's an area, for instance, like hazardous waste, for instance, that I looked at a company recently in that space, if we're not experts in it or know people or advisor or anybody in our network has expertise there, we may be less likely and less interested to invest. But also if we might be overweighted in a certain area. So for instance, fund one, we were overweighted in consumer fintech. So, we might need to, the bar is higher, or we might wait to see some of those kind of play out. And so it could be a pro in that we know the industry very well and could add value in a unique way, but it also could be something where, okay, we need to assess the portfolio and see where we're weighted or underweighted in.
Yeah, got it. And there is a significant amount of talk around diversification on the website as well. So how do you ensure that the companies that you are investing in are diverse and there are underrepresented founders there? So is that like a dedicated focus that they have to come from underrepresented founders, or majority of the deals are sourced from there? Or are you also open to white founders, conventional founders? So how does that go?
All
Yeah,
founders,
yeah.
yeah. We're very clear that we want to invest in all founders from all walks
Right.
of life. So we don't exclusively invest in women or minorities, but over 80% of our portfolio companies CEOs are women or minority in Fund One, and that's above industry average, right? And so that's what happens when you get a Latina woman running a fund, sure. Right? And we understand certain markets that they're targeting and understand certain unique challenges that they have beyond being a founder. and it helps that that's a big part of my network as well. I mean, I represent a millennial mom, Latina, right? A lot of different things, which I'm very proud of, and so is the team that I'm building. But the way I think about diversity is less of a check the box, right? So is more. It's not like, oh, you have a founder that's diverse, great. It's more of, hey, how does this person, whoever this person is, whatever gender they want to be, or they claim to, or they associate with, or whatever pronoun or whatever they identify as, what do they have that's unique to this market? And it could be a direct translation. So for instance, we have founders that are Latinos that grew up in this country and want to build wealth for the Latino community. That's great founder market fit. There's some that have they're a mom and they couldn't find healthy baby food for their kids, they're working mom that did that, and so they might have a unique perspective on that market. um, so we assess that, but we think about diversity more broadly. We think about the founder, but we think about the team that they're building. We think about the cap table, the customers that they're targeting, even the LPs that are in my fund, and even on the board that I serve on. So I think about it more broadly in the way we, first and foremost, we're looking to make returns, but we're also looking to change the infrastructure of this industry that looks, a lot of times, many times the same. And we think we could do both. It's not exclusive. It's not either we invest this way or we make returns. It's we make returns first while we're doing it, in a very thoughtful and diverse way. And so, I've invested in all white male teams, but the core customer base were Latino and African American. And I'm like, how do you not have any minorities on your cap table or on your board? And so we're also able to win in oversubscribed deals because we have that perspective. So, and even more broadly, I think about the people that I hire, both part time as well as full time, the suppliers that I work with, the advisors that come on board. Right. So we think about it holistically versus just kind of a one off shot and, kind of a check the box as well.
For sure, that's great, and that's definitely something to be proud of in the current VC industry, where just about 1 to 2% of the investment goes to underrepresented founders, and you having around 80% of your portfolio in that area is something definitely something great that a lot of VC should look up to and try to replicate in some respect, right? Also, one more question that popped up in my head is, uh, since like the major focus is obviously, since 80% are underrepresented founders, the major focus seems to be there, right? So what is it, because your majority of your deal flow is from underrepresented founders, or is it that you have deal flow fairly equal from all these different sections, but it is highly likely to get invested in if it's from an underrepresented founder? So how does that work?
Yeah, that's an interesting question. I mean, we haven't looked at it for a while, but I would say we have 50-50. I mean, like, um, I think if you look at our website, there's all women on our team, as well as uh, pictures. And if you look at we have our founder pictures there. And so maybe it's more welcoming for founders to say, oh, wow, okay, there's someone that looks like me, or, they might be more friendly to an investment, um, which is great. We want that and we welcome that. But that's not always the case. Like, look, during COVID, we saw the number of women founders go down significantly, even though we're all women on our team. And so we were very thoughtful about that and said, well, why? And look, like, I'm a mom of a 3-year old, and I realized, like, it is very hard to run a business and to be a parent. And so there were, for both parents, but in particular for women, especially if you were pregnant or just give birth, or all the things. And so we were very intentional about saying, hey, if you can't meet during these normal hours that we take meetings, why don't we focus? Let us know when your child's taking a nap. Maybe maybe you're nursing and we turn the video off and you talk through that. And so it's just really being intentional about that. Even before COVID, when I would have a lot of people come into my office, I would just a simple note on the invite to say, hey, if you're a new mom and you're nursing and you need somewhere to pump, just let me know. It was a very simple thing. And the amount of feedback that we got from men and women to say, wow, I'm not even pregnant or anything, but thank you for just even being considerate. So and again, I think for me, I experienced that myself. And so just being intentional about, all the genders and we're trying to be thoughtful about that. So it's welcoming and opening. I mean, if you see a website full of white men, what are you going to assume that they're going to invest in? So on the opposite approach, right? Being or all the senior people are not women. What so I think we're just very intentional about that. But no, certainly we don't just invest in women or minorities, and we often get a lot of people that think that, and so they'll just send women. They're just like, oh, here's a woman. It doesn't even fit within our core areas of focus. It's like a Series A consumer company. I'm like, that's not even what we do. So and it's interesting because I wonder if that happens to people that are not women or minorities, right? So anyway, our intent is to be very thoughtful and intentional, and we're proud of who we invest in. We're proud that we have over 80% of women or minorities, but we won't say no to someone just because they're a man or just because they're not diverse.
Great. Yeah, that's a great approach. So you're being inclusive in that respect as well. Great. So talking about your portfolio companies, you have a wide range of portfolio companies across sectors, right? So like what are some interesting companies that you'd like to maybe mention on the podcast, or some interesting founders that are badass in your opinion, that you'd like to share the stories
Yeah.
of?
Yeah, I'll share one in fun too. So the company is Sigo Seguros. Nestor is the CEO's name, and he's an immigrant to this country. I met him a few years ago through an angel network that I'm a part of here called Angeles, which is a lot of Latino executives that formed an angel group. And I was an early kind of advisor to the group just to increase the number of Latino founded startups. And so he came to pitch. Actually, he was late to the meeting because his flight was delayed, but he came and I met him and he just kept in touch. I mean, it was very hard for him to raise early on. He was able to raise some money and have early validation. But what I love about him is, first of all, it's the founder market fit, right? He definitely has a chingon factor of being in an industry where it's insure tech, but it's focusing on the Latino community, which many people still think is niche and they don't realize how fast it's growing. Being able to just be a hustler and not do a lot with a little, but also send one of the best updates I've ever seen. Like, everyone kind of sends updates, but just being top of mind continuously and showing the growth, saying what he said he was going to do and actually doing it. And then we reconnected with one of my friends who's a consumer investor here, and he's like, "Look, I don't really do a lot of fintech investments, but would love to get you on board to focus on that community while also and we focus on a lot on fintech, so focusing on that." While also him bringing in the consumer and the marketing perspective. And so we co-led that deal back in the first quarter, and they've just been growing and growing and growing like crazy. They're basically the Geico for the Latino community, who everyone thinks is still like, doesn't have a lot of funding or they think that we have a low average household income, which in general we do, but it's been growing. And I think we don't use phones. We actually use phones more than the Black and Latino community use phones more than, the kind of other demographics. And we share more, we're more loyal, it's a more sticky product for us. And so they've been able to take advantage of that. And actually they've been able to, we looked at the cohorts, side of not only Latinos, but all kind of demographics, right? They're just doing a better service than many of the other insurance providers. And so that's one where it fits so many parts of our thesis, and I'm very proud to have invested in the company.
Yeah, that sounds great. And besides, since having invested in a wide range of companies from a wide range of sectors, so how do you value add to all these different kinds of companies solving different kinds of problems?
Yeah, I mean, look, at the pre-seed, they're super early. Uh, Oftentimes we like to lead. We believe that you don't need a lead, but if you lead, especially with certain founders that don't have access to a network or aren't in a capital intense, city or where there's a lot of capital, you oftentimes can set the terms, help catalyze the rounds, bring in other strategic investors. Sometimes we join the board and help them get institutionalized and have you know, board meetings, budgets, just very kind of simple things. Basically, get very involved, and whether it's making connections to other investors, whether it's making connections to customers. We've done a lot of product R&D, especially if I'm the consumer, demographics. I've done even like videos for founders and ads. I'm like, whatever you need, I'm going to do because there was one company called Encantos that is selling to parents for bilingual kids, and my son uses the product, and so they had me do a video. Not that I'm an actress or anything like that, but I was like, hey, it's an real authentic feedback, insight from a true customer. So we anything our portfolio companies want, but the biggest thing is the capital, the getting basically de-risking to the seed, and then the last thing is sales. So I was in sales for many years, so building out a sales team, hiring, interviewing, thinking about a sales process. Right early on, people get customers, but many times it's just like who can who's going to sell or who's going to buy our product. And then once they get to a certain point, it's like, okay, how do you institutionalize that? How do you build a sales team? How do you formalize a sales process? Is something that I've also helped with.
Yeah, absolutely. That's a great value add in itself. Besides, is there something that's a big no-no or a red flag for you in a pitch? You like everything, but there's one thing that's wrong, and you're gonna say no to that deal for that. What's that thing?
Yeah, I mean, early on, you're building trust, right, with founders. Like I raised two, and I need to build trust with my investors that invest in the fund. And how do you do that? Is you know being as clear and detailed as possible, even if you don't have a lot. But for me, it's um, if what you're saying doesn't fit with what you're actually doing, if you say one thing and then I'm like, wait a minute, and then you calculate back how you're going to do it, does it make sense? And like there's not much to go off of early on, and so you're going off of the person and their ability to you know I know sales is part of it, but bring on investors, bring on team members, bring on customers. A big red flag for me is not being fully honest. It's like a big no-no. And I'm not saying people are lying, but I think I know the game. I know that you have to, sell the vision and all that, but also be realistic with it. And for me, I like to dive in deeper. I like to ask a lot of detailed questions. I've been told, I do the most diligence, at the stage that I do. And I'm proud of that because for me, it's like, I really want to understand everything that you say you're going to do, and knowing that your business is going to change, you know, 5 times before the next raise, but really understanding how you're thinking about the business, what your go to market strategy is, how you're going to make money, just really understanding all the pieces of it. And if things aren't adding up constantly, and if you're not following up and you're rushing to make an investment, I'm like, why all the things like, I've been doing this for 8 years now, and I've seen a lot of mistakes that I've made, and usually a lot of that involves not doing enough diligence, not really, rushing because of FOMO, not getting to know the founder as well. They need to get to know you, and you need to get to know them. It's a two-sided thing because it's a long partnership. And so for me, that's been the biggest red flag of like, you know, we're just not going to be a good fit. But there's a lot when it does work out. When you get excited, I get excited about it. We're like jamming out about the business. I'm hopefully adding insight. You're adding insight. Um, what gets me really excited is when someone's just like changing this industry, and it's like this crazy big idea. You're like, well, how are you going to get there? And then we can talk there. Okay, well, this is where you're starting, and get really excited about the huge potential for me is what excites me. And then, obviously not being detailed or rushing and lying is a huge red flag.
Absolutely. And I could definitely see through the excitement coming through while you were answering this one. All right. Coming to my last main question for the day before we move on to the rapid fire round, which is what do you want to see change in the entire VC ecosystem? I know you are being a part of the change yourself, but what do you want to see change at large?
I would love for it to look different. I would love to have wealth in different communities, and I would love to get capital to a lot of different types of businesses that are solving real world problems. Like it's great to get your food delivered faster, but I mean the climate change is one of the biggest problems that's facing our world today, and be able to solve some of these problems I think is huge. And so that's what I'd love to see.
Yeah, great. Let's now do the rapid fire round, which is basically I'll ask you 5 quick questions about your investments at Chingona Ventures, and you have to give 5 quick answers. Are we good for it?
Okay.
All right.
Yeah, let's do it.
Yeah. So the first one is, what are the sectors and regions you invest in?
Fintech, femtech, food tech, health and wellness, and edtech, and all over the United States.
Great. What stage you typically invest in?
Pre-seed.
What's the typical check size?
250 to $1 million.
And where can founders pitch you?
Go on our website, Chingona.Ventures, submit form and submit your business. We literally look at every single deal that comes through, and we respond back if it fits our thesis.
Great. Last one. Where can our listeners follow you?
So I'm on Twitter, Samara Hernandez, and we have an Instagram, Chingona Ventures.
Great. I'll make sure to plug all those links in the show notes below so that our listeners can get there easily. It was great talking to you, Samara, and happy investing.
Thank you. Great to talk to you.
My pleasure.